Let's take a look at the bigger picture. Michael Landsberg's with us, CIO at Landsberg Bennett Private Wealth Management. Some of your thoughts on this week, and what did it tell you? What kind of moves are you making going forward?
I mean, it was quite choppy this week. Certainly, every other day we're hearing some rhetoric out of Washington where you don't really know what's going on. But I think at the end of the day, the market's telling us, at least the bond and the currency markets are telling us that we're in for some slowdown, some deceleration in GDP. I think actually CPI will continue to kind of surprise on the downside a little bit, and that's a good thing in the fact that prices go down. But it's also a concern: is it really kind of portending more of a recession? We don't think it's going to be recessionary, but I think those moves in CPI may make the Fed move a little quicker than we thought.
So it's interesting because CPI, PPI, we saw obviously a little bit cooler inflation. The disinflation, it's going in the direction at least that they want. How many cuts do you think the Fed should do this year and next?
I think it's tricky. I mean, the Fed's been wrong a lot. Last September, we thought, we're going to go from 2.5 to 3, while the Fed was saying we're going to go to 2. We got to 3. Then I think the Fed had baked in, hey, we're going to continue to go higher. Now we think it heads back to 2.5%. I don't think they make any moves right away, but I think the June, you could see one. My concern is we have inflation going up on the back half of the year, notwithstanding any effects really from long-term tariffs. But I think you could see 1 or 2. Probably the June is probably where you get 1. My fear is they get a little bit whipsawed. They lower rates, and then all of a sudden, we see inflation kind of pick back up later in the year. Hopefully that's not the case. But again, I don't have a lot of credibility or a lot of faith in what the Fed does. We typically look at earnings that kind of drives our decisions.
So in a portfolio, you're suggesting having some more insurance, some more utilities. How much in the defensive plays do you think would be right-sized in a portfolio now? Why is this?
I think most investors and probably most financial advisors are grossly overweight to the Mag 7. They have been, it's worked well, but it certainly hasn't worked in the last, let's say, month. And we think it's going to have some problems for the next, at least few weeks into another month. Most investors are underweight insurance stocks. Some of these defensive names, utilities as well. And I think that's where you want to rotate some of your money to. If I look at those overweightings in some of those names, I think you need to take that back. We had a good 23 in tech, a good 24 in tech. I think you need to be rebalancing. If you haven't done it, maybe today is a good opportunity to do that. But I think you need to look at places that are holding up. Those two areas are, and as well as Europe. Most investors in the U.S. have kind of neglected the rest of the world, for rightly so, for the last few years. But Europe seems to be in a good spot over a recession, and they've got some momentum. So we think you could put more and more money over there, give yourself some diversification, and smooth the ride out a bit.
So, I mean, today we're seeing the Mag 7 higher, even though Apple's having the worst week, for example. But Nvidia is higher by about 7.5% this week. So it's not the turning point for the Mag 7. You're not back in on this group.
No, and we still own the group. We've just basically taken it down to a slight underweight. Part of it is they've had such a good run in 23 and 24. And as you know, the Russell 1000 growth and the 200 growth are going to do some kind of reconstituting or revaluing, if you will, later this month on the index. And they're going to be reducing 6 of those Mag 7 allocations. There's going to be some selling for folks that either index themselves to that particular benchmark, or the benchmarks themselves, which you'll see ETFs selling. So we think there's going to be some pressure kind of trimming those back. And again, it makes sense. They've had such a good run. Yes, Nvidia is up right now, but in reality, it was over $140 just a few weeks ago. We think there's going to be some pressure for the next couple of weeks until this kind of forced selling, if you will, gets finished.
Right, understood. So in the next couple of weeks, it seems like you're waiting for whether it's a technical analysis or something fundamentally. What is it that you're watching for to expect the market to look a little better, where you get off the defensive plays?
Again, from a standpoint of being defensive, we're seeing kind of the numbers are playing out. I'd love to be on offense, but just the numbers that we see, inflation going down, growth going down, decelerating from a GDP standpoint, that's more of a defensive place. It doesn't mean you can't buy stocks and things aren't going to work. It just means the stuff that typically works in a inflation up, growth up kind of full boat environment, which we've had for the last couple of quarters, that just doesn't work. So I'd look at the playbook for last summer where we had a slowdown and growth kind of suffered last July and August. It's kind of the same playbook here. Be a little bit more defensive. The nice thing now is Europe's in the mix, and we can add some money to Europe where we couldn't do that before because they actually are accelerating. So we're looking at rate of change acceleration. In tech, it's decelerating, and that's why we think it's a little too early to buy those names, simply because we think there's more downturn in front of them, at least in the short term.
Yeah, understood. And then you do actually have some stock picks for us that you think could work in a portfolio, right? Could you tell us a little bit about those?
Yeah, again, some of these names, Nextera is a name, it's the holding company of Florida Power and Light. It's the utility story, but also it's a growth story. Lots of people moving to Florida, from New York, from the metro area, from Chicago. Obviously, the winter helps Florida, but Florida's booming in terms of people moving in. That stock has done very, very well over the long term. It has traded off a little bit and gives us an opportunity to kind of enter again. But you're also getting kind of a closet nuclear / solar play, but without having all the risk of buying just those stocks that don't have any real earnings. This is a great story. Demographics work, and it's got a compound growth rate both on sales, EPS, and dividends. So we like that name. We like Progressive Insurance. It's another thing that, again, momentum is in the right spot. You have to have car insurance. I never seen a vote against insurance companies. They always seem to be profitable. They never seem to lose any money. And we certainly think that's going to continue to do well. And kind of my flyer, if you will, is a name that we've owned for a long time. It's given us an opportunity to kind of look back at it, is Axon Enterprises, ticker AXON. They're the leading maker of body cameras and tasers. And we think that's a business that, again, it's 25% off of where it was 6 months ago. We think it's an opportunity. We do not think the taser business and the body cam business for municipalities is going to be declining. So we think that's a good story that has some legs. And again, it's an opportunity, if you don't own it, to be able to pop back in. I hate to come on a show and tell people to buy it at $700. We've owned it for a long time, but at $550, it's certainly more attractive to enter, right, with the idea that it's got some growth to it.
Yeah, that makes sense. Is there a don't in your mindset right now for investors?
Yeah, don't get sucked into the idea that small cap is cheap here. Small cap's been negative for almost 3.5 years. It peaked in November of 2021. It's not got back there. And so you hear constantly people come on in the media about the valuation story and blah, blah, blah. I'm a kind of show me, and actually I'll believe you then. I haven't seen the earnings growth numbers yet. They finally started to peak a little bit in small cap to make us start to look again. But again, I think it's a value trap. It continues to be ugly. So why go in there to an area that hasn't done well when we potentially are entering an area that we have some unknown? So I'd stay away from small cap and be able to look for things that have worked, like some of the big US stories. And again, like Europe, that's worked in the last month or two. I think that's where you want to be.
Yeah, that's good advice too. Michael Landsberg, CIO at Landsberg Bennett Private Wealth Management. Thank you, Michael.